What's going on, everybody? Welcome back to another video. So today I want to actually go over the positions that I actually ended up taking today, both inside the live trading room and also the trades that I took in the private group as well. So today was a phenomenal day. Not only did I not lose a single trade, today was a 13R multiple day. So if we look at the first trade of the day that I actually took was a 2.5R multiple. The second trade of the day that I actually took was a 3R multiple. The third trade was a 3.5R multiple. And the fourth trade was a 4R multiple. So I have around a 13.5R multiple on the day, meaning that if I risked $100 on each one of these trades, I ended up making $1,300, or I ended up making $1,300 throughout the day, which is amazing. So putting it into the perspective from a risk man, I risked roughly around the same on each one of these trades, but putting it from a risk management perspective, I have to lose the next 13 trades in a row to give back today's profits alone, which is why it's such an amazing trading day. And I want to give you guys insight on today's trading day. So essentially, ES is very low, and just grabbing the basic knowledge of the stock market, buy low, sell high, I didn't see there being enough steam or enough volume to actually push price through this daily key level, which is going to be, I believe, 2021's all-time high. Yeah, 2021's all-time high. I would have needed to see something along the lines of or I think we would have needed to see something along the lines of Jerome Powell saying that inflation is too high, rates are going to have to be continued to be increased for us to really see that volume and that breakthrough this area of resistance. Now, Jerome Powell did speak today, but he didn't really touch up on any of that. This is why we see all the consolidation that we do. But essentially what I was looking at is just taking bounce plays, looking to see if we can get some form of a pullback back up into the 127s or the 152s, the 152s being our previous 4-hour structure zone, which is what I was looking for. So when it came to the market actually opening, price broke below this 5106 area of previous support, and I was looking for price action to come back down into either 5094 or 5086, which for those of you guys that are in the live room, you guys could just go watch today's webinar. It's already posted, and you guys can recap this trade. So price action ended up coming down into this key level, and we started to actually reject the key level. Now, what made me buy on this specific rejection was essentially the order flow, the footprint chart. So if we look into this footprint chart, we're only going to be able to see these absorption setups on the footprint charts. Notice all of the volume that we actually see coming in at support. Notice the negative delta. The delta essentially is just the difference between the bid and the ask. So we have a negative delta here. So there was more contracts that actually came in for aggressive selling at 210 or at 5089. There was negative 210 on the delta, negative 103. But what really caught my eye was this negative 386 here on the delta, essentially near the bottom of support. Notice all of this aggressive selling compared to the aggressive buyers. We can definitely make the decision that, hey, you know what, this is a negative. There's a negative delta on this specific candlestick, and there's also way more aggressive selling, but we see a rejection. These sellers aren't being rewarded, so these orders are actually getting absorbed. And what do I mean by absorption? All that simply means is that there is a passive buyer coming in here and somebody's passively buying up these orders. And when the demand for the selling actually dies down, we should see a move in the opposite direction. This is why I like to use the footprint charts nowadays, especially at these key levels, because we're able to see where there's liquidity sitting. We're able to actually see if there's absorption or we're going to see a follow through, because before, normally I would be looking for a continuation to the downside. And you know what? If there was aggressive selling in the markets on this specific candlestick and we saw that those aggressive sellers were being rewarded, I would have gone short. But what I saw was that those orders were most likely getting absorbed. So on the first trade of the day, when this candlestick actually ended up closing, I ended up taking the position as soon as this candlestick started going bullish at 50.92 with my stop loss under the low. Now, my original target on the day was all the way up here, so I was aiming for a 5R multiple on this first trade. But essentially, running you guys through the trade management on this specific trade, what I saw was that there was orders and there was liquidity just sitting here at 5,100. And again, you can only see that on the DOM. You can only see that on the heat map. You wouldn't be able to see that on just the price action chart, which is why I've really dove into indices and futures, simply because we can have this extra edge in the markets and beat our competition. You have to keep in mind, trading isn't just you versus you. It's you versus other people, because when you make money, it's because they're losing money and vice versa. So I was actually concerned about this 5100 level because there was a ton of liquidity sitting at this level. So what I decided to do is, as price action hit this 5100 level, I immediately moved my stop loss to break even, covering my risk in total. And I was paying attention to this 3-minute time frame. When I was telling everybody in the live room, essentially was I want to see a break past this 5107 and 5108s for me to continue to hold the position, because not only do we have liquidity sitting at this 5108, actually the 5107s all the way through the 5108s, we also have this previous area of structure, which again, at a situation where if I was trading without order flow before, I would have probably closed somewhere down here thinking, yeah, we're going to see a pullback and then maybe a little bit of rejection and a continuation. But what confirmed it for me was that these contracts actually got filled here at the 5107s and the 5106s and the 5108s even. So when those big contracts to the short side got filled, I immediately closed the position at 5105, leaving me with roughly a total R multiple of a 2.5 R multiple. So that first trade of the day was phenomenal. Second trade of the day, JP started speaking. I essentially looked for the same setup. You have to just think about where the market makers are, or not even, I don't even want to call them market makers, but where is there going to be liquidity for us to potentially take a position? Yeah, sure, I could have shorted up here, looked to take a profit down at support, but price action was already trading down here. And essentially what I saw with the second trade is a very similar absorption setup. Again, I was looking for a bounce play with the same type of absorption. Didn't take a trade here, even though I could have, and it would have been another very easy trade. But what I saw that really caught my eye with this second position was that if we look back at the footprint, this is our key level. Notice that we have a negative 1,000 on the delta at this key level, but what really caught my eye here was this negative 3,000 on the delta that actually ended up coming in. So there was an extra negative 3,000 delta, an extra 3,000 orders that actually ended up hitting the offer on an aggressive sell. So the fact that we're seeing all this aggressive selling under support and we're seeing price start to break back above support was a big clue for me that, hey, you know what, like somebody's passively buying up price as soon as price gets down into the support range or in the support range. I'm going to go in the opposite direction and I'm going to take a position here. Now, I didn't put my stop loss all the way under the low at 50.78. I ended up putting my stop loss just slightly above or slightly under this low over here, where I thought, you know what, I'm going to get out quick. If I'm wrong, then I'll just look to take a position after. You know, it's not a big deal. I'm already green on the day. And I was only risking roughly around 1 R multiple here. So worst case scenario, I take another loss. I'm still up another R.5 multiple, another 1.5 R multiple, which is still a good trading day. But this trade basically ended up closing, pulled back a little bit, and then price action just rallied and went in my favor, and I ended up closing at roughly a 3R multiple. Now, I closed here because I was targeting all the way up here. This is what my trade looked like, and you know what, if I would have held the whole thing, price action would have came up here and it would have been fantastic. But I ended up closing all the way down here just simply because I didn't like the rejection I started to see and the pullback with price action on this specific candlestick. So with all of this consolidation, I just said, you know what, I'm just going to close the position. You know, it's already a good enough day. I'm already up 5.5 hour multiple. Worst case scenario, you know, I could look to take a break at the highs here or wait for price action to pull back down into the support range for me to look for another position, which again, you know, looking forward into the future, price action did exactly that. It pulled all the way back into support, which kind of open this up over here. And essentially the same exact setup. What did we see? Go to the 5-minute time frame. We saw price action come back into the range. We saw price action actually come back down under the range. We're seeing all of this aggressive selling come in, and then we have a negative 2,000 on the delta with this super weak candlestick here. So essentially this is a wick, and this is also a wick down here, super weak candlestick, but we're negative 2,000 on the delta again there as well. So these are all different signs that I'm looking out for here. So in this specific situation over here, when I entered at 50.86, it was just simply because price was rejecting this area again. Now, there wasn't really like anything that I saw in the footprints that made me execute on this trade, other than, of course, that there was more aggressive selling, that there was aggressive buying. And then we're seeing a rejection, which made me take the position. I ended up putting my stop loss again under the low when it came down to this trade. Now, I was targeting again this high here, but when price action started to come back up and rejected this area twice, as soon as I saw this rejection and price came all the way back up, price action started to kind of consolidate a little bit here on the lower time frames. I went on the 3-minute time frame, started to see a pullback, and then I was like, you know what, I'm just going to exit the position. I'm happy with the R multiple. Worst case scenario, if price action continues to break out to the upside, I'll look to take a long position at a break of this 51.08s here. So when price action actually ended up coming up into the 51.08s, pretty much very shortly after I took profit is exactly when I executed myself into the position. And in terms of like the footprint chart, there wasn't really any aggressive selling that I saw, but what I did saw was that there was a positive 2,000 on the delta, meaning that there was an extra 2,000 orders. I hit the offer for buys at roughly what this was at the 5,100 level. So again, I also saw, and I forgot to mention this, I also saw the heat map. And basically what I'm telling everybody that I'm trading with at this current moment in time on Discord is that we have pending orders here on the heat map. And if we could see these orders get filled, then most likely we're going to see a big move, but we just need price to get to the 5,100s. For those of you guys that aren't into order flow, I highly recommend you guys get into order flow because it's essentially one of the best ways to improve your edge inside of the markets, especially if you're somebody who already trades supply and demand and uses key levels. So what I was looking at here essentially was for price action to break above 108. I took the entry at the break of 108. We're at 108.25. Stop loss at 105. Super tight stop. But again, I'm using this volume in my favor, which is what allows me to have this super tight stop. And my take profit is up here at, or was up here at 51.20. I continue to actually hold the position because volume was just so strong. I wanted to see if we can get a move up into the 51.27s. Then again, price action ended up starting to come back below this resistance range, and I decided to actually execute my position there, and I ended up closing the position right then and there and called it a day. So today was a phenomenal trading day. For those of you guys that are in the live room, I will see you guys tomorrow morning. Hopefully we get some great volume like we did today. And other than that, I will talk to you guys in the next video.